Okay. So just back to it. I'm just gonna give a quick review of what I said before because very some of you had different audio problems, but I'm just gonna sum it up very quickly, and then I'm gonna move on. Okay? Because you're start because this is with the first half hour of London's over. You are getting into a period where any trade opportunity is going, if there is one in this session, is going to begin fairly soon, and so I'm keeping just my eye out for this. Okay, but again, you have a situation where on a weekly chart you have an upside breakout in the dollar index. Okay, this flag, Saturday consolidation, breakout, retest, and then it's starting to head higher. The problem is on the daily chart, what this looks like is a head and shoulders, and you have this lower low, meaning a change of trend to the downside, and obviously where this left shoulder is, you're getting resistance, and now you have a lower low. Okay, so long term, what's going to happen if this head and shoulders plays out? It's going to cause a serious breakdown in this like bullish long weekly chart bias in the US dollar index. And so I basically have like a situation where one time frame saying one thing and the other time frame saying the other. If I only go by that and make trade decisions based on that, that's basically what I'm doing, is trying to make decisions based on basically based on insufficient information, and maybe thinking I have to take trades when the edge I have of price going one way or another on a longer term basis is only maybe slightly in one way or the other. Okay, I want to avoid that, because in trading, because in poker I can get by with like a 3% edge because I'm playing hundreds and thousands of hands, enough so that 3% edge can play out in a significant way. Okay, and I can, and then I'm playing with a small enough amount of money where I can kind of keep playing over and over and over, so that I can withstand, like, if I get a lot of, like, let's say tails in a row, if I'm flipping, like, if I use the coin toss analogy. The problem is, in trading, again, I'm only placing like maybe 3 to 8 trades a day, let's say, on an average day, 3 to 10 trades. It varies, but like, let's say somewhere in that range. If I'm placing somewhere in that range, I could have like 7 losers in a row. Okay, and that could happen for like today, tomorrow, the next, like, where I'm just having like just more losers than winners with like a very too small of an edge. And so with trading, I actually can't play like I would in poker, because I'll just, eventually you'll just lose everything, because the problem is the losers take a bigger toll than the winners, because losers, if I have enough losers, my account can drop, and then I'll have to reduce my trading account size, and then actually, just to get back to where I was before, I would have like it would take more wins just to get back there, if that makes any sense. It's like, so that doesn't actually work, because I would have to, like, let's say if I lose like 30% of my account from just a string of losses, I have to really, to be smart, I have to like reduce my trading lot size, because if I continue at that pace, which can happen, I'll lose a huge amount. Okay, so I have to make sure the trades I'm taking have a very, very high edge, like very high chance of succeeding, and then also a very good like profit to loss ratio, or like reward to risk ratio. I like saying profit to loss because that's more tangible, because risk is there's multiple kinds of risk. Like, you could say the risk of the trade succeeding, like price hitting the target, or what about the risk in terms of how much I could lose versus how much I could gain. I mean, when people say risk, because it's it can be like a vague term, and so it has to be like properly defined. So let's say, like, basically, like, the risk of the chance not occurring has to be low, and then like the profit to loss ratio has to be high, basically. So that the infrequency, the amount of trades I take, allow that edge to like be kind of produced and show up at a high level on a consistent basis over and over, and so my count keeps going up. Okay, I mean, and that's the goal. Now that's very hard to do in practice, but like, you have to actually start to think about that, and that will, you have to start thinking about that. Otherwise, you're gonna kind of be running on like poor mental software basically, and it's gonna take you a while to figure out why like you're taking like these like coin flip trades that have a very low edge and you're losing money in your account. And you're gonna have a hard time understanding why that's happening. Okay, so I know that to place a long-term trade in the dollar is not smart right now. But what I can do is, if I just look at this, if I break it down by time frame, where is there a high edge? Well, there's a high edge right now, meaning to the downside, because I have a head and shoulders in the early stages forming. I don't know if it will complete itself, but because I have this low breaking this low, you're going to have sellers. And if you guys were hearing me before, I said you're going to start to see selling somewhere in this fib area. And in the last, this is a 15-minute candle, okay? And so in the last, so this one started 8 minutes ago. So basically in the last like 20, basically the webinar started on this candle, okay? And what did I say? I said I was looking for downside in the dollar index, that this is going to start, you're going to see selling here, okay? For very clear reasons, all right? And so you have this fib area, you have this role reversal, you have, and then the lower low this lower low is providing a lot of direction, and the head and shoulders providing a lot of direction. So this area shorting here is actually a high edge, where like the chances of that happening is actually high enough where that's worth taking a short in. Okay, does that mean I'm just automatically going to take it? No, it doesn't mean I'm just automatically going to take it, but it means I'm going to look for that short in a certain area based on like certain conditions. Okay, does that make sense? So I've identified this area is where a trade is worth putting on. This is a high probability trade situation and it's not holding all the way like down here, but holding at least if it sells off of me at least here before this fib, before, let's say basically this, if it drops down to here where my arrow is, that'll be like a 50% pullback of this move up, and you might see buyers there. So that's maybe the first place it could drop to, okay? And maybe if I shorted there, I would like move my stop to break even, okay? Because if it heads back up, it's likely gonna head even higher. But if that gets a reaction and then you just have a minor bounce and then another drop, you'll at least get very likely back down to these lows, if not break down to a new low. So this would be, you have a lower low, lower high, projecting to a lower low, okay? Does that make sense? So this area is a very high chance we're going to see that kind of reaction where it's worth betting a short, okay? Certainly, I cannot go long. Not following this lower low, and this is where people are going to short. So I've identified that's not where I'm going to take a trade, okay? I am not going to take a trade along there. I don't care if it goes up, because 80-90% of the time it's not going to just break and clear to high, through the higher highs. Sometimes that can happen. More of the time it's because of news. Some of the time it's because maybe there's something going on like a different pair, like the euro. Maybe something I missed. So it's either going to be something like I missed in terms of like the information that I gathered by looking at other pairs, or it's going to be unexpected news. Usually it's going to be something like that. And it's either something I missed in terms of I didn't see something, or I saw it, but I didn't actually think through. Oh well, okay. So this is here, this price is here, and this other instrument is here. What does that mean that people are probably gonna do? Maybe I didn't think it through like clearly enough. It's basically one of those things, okay? But I think I thought through things clearly enough where I'm not gonna take this. And even if I have the euro looking very bullish, I generally wouldn't take a long here. I mean, if I have the euro looking very bearish, I still wouldn't take a long here, because now I have the dollar index looking bearish, right? At least for the next several hours, okay? If not like a day. I have the dollar index, US dollar looking bearish, but then if the euro looks bearish, I would also have the euro dollar looking bearish. Well, the dollar index is made up of like 2/3 euro. Basically, I'm seeing a mixed signal. I'm seeing basically some people are going to sell that dollar index, the dollar, and then some people are going to buy the dollar through the euro. Which one is gonna have like more money behind it? I don't know. I might think, well, this one actually has probably like maybe a slightly greater chance of having more money behind it. But if it has slightly more money behind it, it's gonna have more opposition. So I might see like, let's say I might see like, you know, down on this dollar index, but then it gets bought up to a higher level and it gets dropped down, and you know, you're gonna have very choppy, you know, price action, as opposed to like clean moves that happen like all the buying is on one side and you got these strong moves that basically are what create like the winning trades in your account basically. Usually it's not the choppy price action that you think is going to trend that's going to make money. Usually those are places to lose money, okay? So though even in those situations I wouldn't do that. But I'm looking at this as a short location, and then I have other pairs confirming that, which, so on this time frame I have like a high edge bearish situation in this dollar, and then I have euro, I have dollar yen, I have gold confirming that as well, okay? So all of these factors combined, the chances are very high that the dollar is going to get sold down. Not necessarily like right here, though I said it can happen, but I said anywhere in this area, okay? So if, let's say if this you know, like if they, you know, starts heading up and like heads up to that doesn't mean it's not going to get sold down. It just means that this selling hasn't really started. It's anywhere in this area, okay? And part of trading is being able to decide where in that area is that going to occur. But you're seeing that starting to happen right now. You're seeing the red start to happen. The longs getting out, and basically people looking for shorts, and some people getting in right now, okay? Does that explanation make sense so far? Hello? Okay. So again, you know, in trading, the biggest reason people don't make money is because they are taking these low edge trading situations where they'll rationalize in their mind, oh, well, you know, it's kind of like the thing is, you know, I could make 10 for 1. I could make 10 for 1 here, you know, like you know, like 10 pip risk, but I could make 100 pips. That sounds really great, but they don't factor in that like the chances of that actually succeeding is like really low, like 15%, okay? And even if it's 15%, that 15% edge of winning outweighs, you could say, the 10% risk. And that seems mathematically fine, but actually in practice it doesn't work out that way. First of all, because to actually like pinpoint it to know exactly what the percentages are, it's not like, you know, blackjack, where, you know, usually our percentages are going to be off. They're going to be correct usually within ranges if you're a winning trader, but generally they're not going to be that exact. Second, if it only has a 50% chance of succeeding, I'm not going to have a lot of confidence in it. Very likely what's going to happen, I'm not going to have confidence in it. The minute it goes like 5 pips against me, I'm just going to think, oh, it's not going to work, and I'm going to get out only to see it turn around and go up. But because I didn't have enough confidence in it, I'm not going to be able to hold it. Or it's going to go up 30 pips, and I'm not going to hold it all the way because I'm just so grateful I got 30 pips out of it when I had a 10% risk. I close it out. If that 15% risk edge, that 5% edge in terms of 15% chance of occurring, that's only an advantage if I actually hold it to 100 pips every single time I have that kind of situation. Does that make sense? So people don't actually do it. Basically, they think very short term. But when they plan out a trade, I should get, because they're so eager to get in trades, their criteria for getting in trades is like very like computationally like makes sense some ways, but in practice they basically lose sight of basically all of that stuff, and they do things in practice that basically on a net basis, if they do that type of trade, they'll lose overall. Does that make sense? And so a lot of trading mistakes are due to this stuff. This is why a lot of people say, oh, my analysis is so good, but they're not traders. They can't trade profitably. That's why you have like a plethora of analysts, but there's a very few number of profitable traders, because trading and making money is being able to do proper analysis and make money are not the same. Okay. So anyway, And again, what did I say before? I said gold. You are looking for basically at the very start of the webinar. I said you want. I said this is the start of London Open. I'm looking for shorts on dollar, longs in gold right at the start of the webinar, and look what's happened in since the webinar started. So since the webinar started, look in gold. Gold was right here. Okay, right above 1200. Now you're seeing it's at like 1203.60. That seems like not a lot, but that's actually 35 ticks. Okay, so on a long-term scale, it's like a little over. It's like $3.50 or like $3 basically. But that's actually a good deal for an intraday trade. All right, is that all I would be looking for? No. Okay, so the reasons I wanted to go long this XAU USD, that's gold. The reason I want to go long is the same reasons I was looking to go short, because these things are very correlated. All right, these pairs are very correlated. All right, that's why the problem is you'll have people who are like, I'm a Euro trader. Oh, I'm an Aussie trader. Blah blah blah. Anyone that says that, I know they're not making that much money, if at all. Because generally, let's say if the dollar index is like let's say if this dollar index was at resistance here, okay? If this dollar index was at resistance here, all right? But gold was nowhere near support. What's gonna happen? I might think to sell gold, to sell the dollar index there, basically because when the dollar index goes down, okay, gold has gone up. That's been the correlation recently. Because what can happen is I might get in dollar index, I might short dollar index with gold not being at support, okay? And what ends up happening is a lot of time gold just ends up dropping further down to support. And even though dollar index is at resistance is kind of like a 30 pip area here, the dollar index just keeps dribbling up, and I'm just basically in the red, and I should have just waited until everything lined up. That's where patience comes in, right? Okay, you have to know why you're being patient. People say, oh, you gotta have patience. You gotta do this. Well, you gotta have patience for a reason. You can't just say, I'm just waiting, or just be patient. Patience is not a virtue by itself. You have to know why you're being patient, what you're being patient for. So you have to you have to have done your analysis in advance, so you know exactly why. In this case, this is not a good place to buy. Well, in this case, let's say if gold wasn't at support, wasn't a buying location, it wouldn't have been a good place. So it's where my edge is very low, and so it's basically like it's not up to like standard. It's not up to like quality. It's sort of like if I'm a chef at a restaurant, I'm like cooking a dish, like the steak is like slightly overcooked, and it's only slightly, but I have to like redo. I cannot like serve that steak, otherwise the quality overall that's going to be sent out to like the clients is going to be low. Basically, those are going to be low quality trades. Their reviews are going to be bad, and if I want to like make more money, attract more customers, or like get Michelin stars, that cannot happen. Okay. It's just because they will just I'll often take losers on the trades that I should be winning on, or I'll basically make a lot less, and then also just being down 20 pips. If I take something early, I'm going to my mind will tend to get focused on that, and I'll miss other trades often because my attention is occupied by being down on this trade that I know I should have waited for. Okay. So anyway, what am I looking for? And by the way, look at this. If you notice, this is what looking at price action is. If you look at price, if you look at gold right now, gold, you see the strength of these candles. You see every drop has it's kind of been sort of just like not huge amounts of buying. This is the first sign of strong buying that you are getting. Okay, you can see it in the candlesticks. This is what you have to read. If you watch a lot of like webinars and stuff like that, obviously you know that most webinars, broker webinars, they're just bad because the people that are running them are analysts, and they don't actually like say what they're going to be trading or what they're thinking because they know they're going to be wrong most of the time. Okay. One clear sign of like a webinar to avoid is when you basically say like the webinar, in this webinar, this analyst or so-called trader is going to be talking about like basically a form of analysis that you've never heard of. Like, or basically some obscure form of analysis, like spectrum, like we're going to be examining like spectrum trading, like how to do spectrum analysis, something like this. I saw this in like a, I saw this recently. Let me show you. I'm not gonna show you, but I'll get the name. But like, okay. Well, I mean, anyway, I'm trying to find. Okay, so it's called spectrum technique. I'm not going to say where it's from, but it's which changes lagging and oscillators into advancing price super indicator. Okay, whenever you see stuff like that, all right, you have to basically learn to avoid it, because basically all the information is seen on a basic chart. This is what people are trading. That stuff might help to some degree, but if you need that to make money, you basically just cannot use the direct things in front of you. Like, so basically, I guess is a way to, I guess is a way to put it. It's like, I mean, think of it like this. You know, like you hear like this, like the chef thing. You know, like a way that restaurants test, like chefs will test new hires is they'll say, make me scrambled eggs. And they say if they can make scrambled eggs, I know they can cook. Okay, because this is basic stuff, basic ingredients. Can you actually do this? Can you just cook at a basic? Can you just look at the bread and butter? I mean, this is where all the information is at. And so if people actually cannot actually make money looking at this, and they actually need that stuff, it just shows me that they're basically just trying to look everywhere they can because they just don't know how to make a buck, and they're trying to find like obscure ways that might work for a while, but you know, it's just stuff that like you need to avoid. You basically just need to learn how to look at the price. You need to look at the charts, the basic thing, because no matter what indicators you use, everyone can see these charts. Everyone can see these prices. And if you can't read it, if you can't look at this and say you had a higher high in gold, gold is at support, and now with the dollar at resistance and euro at support and gold at support, you're likely to see a turnaround at the London Open when money comes in, and now you're seeing that. If you can like make sense of that, you need to deal with that, okay? And what you'll realize is all that other stuff is usually just unnecessary. There's a few indicators that do help because most people use them, all right? Not for obscure reasons usually, generally, okay? So you're seeing that confirmed now. So you saw me give this explanation for why I was long gold, you know, short, long euro dollar, long euro dollar, short dollar index, blah 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 blah. Oh, and by the way, for you guys, you know, I know that legally in webinars I cannot say like buy here, sell here, okay? And anything like where I'm doing that is not permissible, okay? I dealt with that when I was at FX Bootcamp. You cannot do that. Like, I know that brokers cannot do that. So what I would say is, look, this is the region where you're gonna see selling, okay? Anywhere in this area, all right? And that's basically how I'm gonna do it. Like, just like I said at the beginning of the webinar, this is where I'm going to be looking for longs gold. So as I'm talking, you're going to find that, okay? So even though I'm doing the webinar, you need to be looking at your charts for an entry like you're comfortable with in that situation. And I might describe a couple entries. You could buy here in gold, as I said right at the start of the webinar. This is what I'm looking for. Or you can wait. If this high breaks, if gold breaks this high on this 15-minute chart and pulls back, that's the next very good long opportunity. Not right now, okay? Because as bullish as this is where people would sell. Okay, this is a pullback area of this trend down. Okay, does that make sense? Can you hear? All right. So if you miss that, basically what you're waiting for is a break of this and then a pullback. Okay. Same with all those dollar pairs. As that gold, if gold does that and pulls back, you'll see those pullbacks occur, like in the US dollar, but you know, all that stuff. All right. So you saw that. So basically you looked at what I'm looking for the day. That's basically all I'm looking for. Why am I not looking for any other trade? Like why am I not looking to go long US dollar? Because any pullback I think is going to be very minor. I'm going to be buying long into like resistance. No, I'm not going to do that. Okay. No matter how much experience I have, buying into resistance does not work. Okay, because people just don't do that. There's not more money buying at resistance than selling for the most part. And even if there is, like, resistance breaks without some kind of reaction, I basically almost never have enough information to be able to assess when that's going to happen. And even if I do have enough information that says that's more likely here, it's still going to be more likely only like maybe, it's going to be basically, it'll happen, I think it'll be maybe 50-50 as opposed to like 30% or 20% it's not going to break through. Does that make sense? Even if I think it's going to break through more, it's still not good odds. Okay? And if I start thinking, oh, it's going to break through and I buy a resistance, which is what a lot of people do, and there's like a subconscious idea like, oh, it's because, you know, I've traded long enough, I've been making money recently, I know what I'm doing. I'm basically just like rationalizing and not looking at the information on the chart. Hey, this is resistance, don't do this. And I'm basically getting caught up in the emotional momentum to go long, and basically what will happen is I'll be liquidity for the market, and I'll be basically the long, the buy order that allows, like, you know, more self-aware traders and more cognizant traders to take their shorts. Okay. And not only that, I'll have a total disregard for like risk. I mean, where would my stop be? I would have to have like a very large stop to be technically valid to allow for like a pullback properly, and you know, it's just bad. Okay, it's basically very poor technique, very bad execution of anything fundamental to trading. Okay, so keep an eye out. I'm going to be explaining these pairs one by one. Okay, so like sometimes in the explanation I'm like focusing on a specific chart because I have to explain this. And so I'm not gonna be able to say take this entry that, or you know, because I can only show one chart. I'm gonna be focused on this. I'm not necessarily gonna be able to look, oh, and this other pair is an entry here. But you know, again, as I said in the beginning of the webinar, these are the things to watch for. And as I'm explaining this, I'm trying to explain this to you now. Okay, why this is happening. All right, and I'm trying to explain to you as quickly as possible so you have an understanding of what's going on. Okay, but I actually have thought this through already before myself. All right, so I'm fully prepared for everything that's going on. But I basically just said why I was looking for gold long blah 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 in the beginning, because I didn't have time to explain it all at once in the first 5 minutes of the webinar. But I'm explaining it now as you know, this London session is occurring. It's already an hour past. And you can see I'm already only into like a few of these pairs, but I've given enough of the explanation where you can make judgments about trades to take and locations to take them. Does that make sense? Yeah, I'll explain the name of each indicator. Basically, on these charts, all you see is this chart. I have stochastics and I have a setting to 835. Why do I have 835? Because a lot of people use 1433 or 1435 and they have like 533. And so 835 is like the middle ground. Okay, it's the middle. That's why I use it. It's very accurate for me. And then I have two moving averages, the 5 EMA and I have the 21 EMA. Those are the two moving averages I find that are most useful. Okay, for me, I found. And that's also how I learned it. Meaning, like, I did learn it that way, so you could say I'm biased. The problem is, but the thing is, I back tested a lot of different, like, you know, moving averages, blah 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 blah, and these just worked. I found work the best. Okay. And so I use them. I used to have like just a crap load of indicators. Like I still have it. Like look at this chart. I have all these indicators, Bollinger Bands, many moving averages, and I'll MACD is usually on here. The reason I don't actually use this chart for this is because I want to focus on price action. Okay, like I want to focus on this stuff in gold, like this right arrow is. I want to focus on this that's happening right now. These are the essentials. Where do I use moving averages? I'll use moving averages for planning trades to see if basically there's anything I should watch out for. So if I see like, you know, monthly central pivot point, blah 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 blah. Oh, pivot points aren't on here, but I also have pivot points and stuff. So like if you look at like, you know, if I look at a particular you know, if I look at like pivot points and stuff like that, you know, I won't have a yearly central pivot point here or a monthly central pivot point on this chart, but I might have that on those indicators, and I'll check. And I want to. It's important to check, like before I start trading, as in part of the planning process. Is there anything that's like significant? Like if I see like a closed Bollinger Band, right, you know, at a certain price level, and it's very steeply closed, I need to mark that because I'm not going to trade against that because closed Bollinger Bands are very strong. Okay, so I'm not going to go long into a closed Bollinger Band on, like, let's say a 4-hour chart until that Bollinger Band opens up. All right. So I will check that, okay? But in terms of like, now that I know we're all like, basically I want to see where all the enemy lines are. Basically, it's like I'm a soldier, and there's a you know, I'm kind of in this battle area or something, or let's say just open ground. I don't know where the enemies are, but I'm given a map in terms of that gives me like clues about where they might be, and then I can kind of sort of triangulate where they're most likely to be and avoid them. Or you could say mines, if I'm walking like a minefield, okay? So I want to know that beforehand, because if I place along it, I don't know there's a steeply closed Bollinger Band right in front of there. Basically, I don't know that chance that basically there's a host of people that are going to sell, and the people that would normally buy are just not going to be there at that time until that Bollinger Band opens up. Okay, so if I don't know that, the decisions I make, and therefore the trading actions that I make, are going to be actions where I'm more likely to lose than make money. Does that make sense? Because the trading decisions are based on the information I have. The experience gives me the judgment to actually know what to do with that information, but if I don't have the information, I don't know what to do. Does that make sense? Okay. Yeah, Reem. One thing, Reem, I don't understand. I don't like, from what Simon told me, everyone in this room doesn't trade personally. Okay. So, when I'm going through these different pairs, that actually isn't usually a problem in webinars, because most people, at least even the people that only look at a few pairs, look at like the few major pairs, like these dollar pairs. So when I'm talking about like the dollar index or gold, you know, or the Swiss franc, this is the Swiss franc, but actually I've only been talking about the dollar index and gold. I've been explaining that basically trading the dollar index and gold, not that one, it's basically like trading the same thing. Okay? And so actually, like, I understand that like you want me to focus on one thing, but but in these webinars, this is actually not too fast for like a typical webinar for a typical group of traders. All right? And you know, obviously what will happen is, let's say you market this to like tens of thousands or hundreds of thousands of people. However many come to this webinar, you're going to have people who are just starting, and you're going to have people who are actually profitable traders or slightly profitable, and they just want to see what this is like. Okay? I'll obviously have to do my best to explain things and cater to everybody, but the problem is I have to find like a sort of middle ground to keep the majority happy. Okay? Generally, I think I will keep like the so-called like the traders who are like making money happy, because my analysis is generally like really accurate, is very good. I just know how to do it really well. And so and I'm not like doing weird stuff. Like, people who know how to make money are not trading like, they're not trading like with like spectrum oscillator analysis and stuff like that. They're basically they know how to use price action, stuff like that. Okay. So they'll stay for that reason. The middle people will stay because they can follow along and they have a lot to learn. And then the people who are just starting, a lot of what I'm saying is, some of what I'm saying will go over their head, but if I slow down and explain things at a very, very basic level too much, it's going to alienate the people who are kind of comprise the majority of the webinar, and the people who are actually making more money, meaning who are actually generating more commissions more commissions, if that makes sense, for you as brokers. Okay. And so and then also the people who are just starting, some of it is over their head, going to be over their head, but actually a lot of it is not going to be over the head. They're going to have some weight, they're going to have some weight, they're going to be able to follow it to some degree. And because they can see I actually know what I'm doing, like if you just saw like if you see obviously this rising gold, that initial selling that you're seeing in dollar index, they're going to see that I actually know what I'm talking about, and so they're just going to stay because they know that I know what I'm doing. Okay? They're going to stay with my webinar. They're not going to want to go to someone who's an analyst who basically says at a snail's pace, oh, this is how to use Fibonacci, blah, 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 blah. I mean, these kinds of webinars, no one wants to attend. Even if they attend them, they don't have lasting value. So you can only attend them once or twice. You cannot actually attend them on a daily basis. And so what you're going to get is, yeah. Well, I'm explaining this, Reem, but I'm also explaining this to all of you because you guys are all the salespeople, and so it's important that you understand like what this webinar is. So I'm gonna move on to the analysis. Okay, I mean I don't necessarily have to like finish at a certain time, but I'm explaining this so that you all understand the pace of the webinar and why I'm going to be flipping through different things. Does that make sense for all of you guys? No? Hello? Can you hear me? Okay. Alright. Okay, so the other thing you have is if you look at the Swiss franc. So now I just basically did basic analysis on like dollar index, and again, you know, other things supporting this is like the stochastics. For example, if you look at stochastics on this this oscillator on this dollar index, stochastics is a very basic indicator. Most people have stochastics or CCI, something like that, on their chart. CCI, stochastics, they're almost exactly the same thing. Okay, so this kind of oscillator, it measures overbought and oversold conditions. You know, if you just look at how, you know, this is very useful to me. So if you just as a basic level, if you look at this low, right when this was oversold, look at these highs, overbought, oversold, where my crosshair is. Now, it's not perfect, so you're gonna get a lot of this, right? But also part of the problem with this is you have this overbought, and now well, why is this getting bought off? But part of the reason for this is because this is a weekend gap, if that makes sense. Okay, so this is a weekend gap, and price just opened, I think, much higher. I think that, yeah, that was a weekend gap opening. Okay, oversold, sold off this low. Look at this low, right at the lows. Now you have high here, and then another high here. And now this low happened where over. So this stochastic is very reliable to me. And to trade against it is like, it's like, yeah, sometimes, you know, sometimes it's not that great, but like most of the time it is. And so to trade against it, my reasoning has to be basically extremely, extremely good on maybe most other pairs that are correlated with this, okay? Because if I'm looking at the dollar index, I have to look at the euro. Because the euro, again, the euro and the dollar index, they're not different pairs. They're not different. The euro is a component of the dollar index, all right? Or the euro and the Swiss franc. If the Swiss franc is going up, the euro almost never will go up. The euro is almost always going to go down. They're flip currencies, okay? If you trade both, If I go long euro dollar and I go short dollar Swiss, I'm basically just over leveraging a euro long, or a dollar Swiss short. Okay, and so I want to look at all of these different pairs because basically I'm kind of just looking at the same thing. I'm looking at basically what's going to happen to the US dollar and gold. And now there's going to be differences. Some are going to go, there's relative strength, relative weakness, but on an overall basis, in terms of primary direction, at least for now, the direction, these things kind of go together. All right? If I look at the Swiss franc, okay? But anyway, this stochastics is overbought in the dollar index is or close to overbought. That's saying for each cycle down, that's usually about 24 hours. That's saying basically for the next 24 hours until tomorrow, the bias is more likely to be down. So I don't want to trade against the stochastics. I have, this is a pullback area. I have a lower low in the dollar index. All those reasons that I gave before. I have a lot of support in gold. All of these things, and now that the price action like this, you're seeing that red and dollar index, seeing this strong green for the first time in a while in gold. All of this is confirming my analysis, which gives me more confidence that this is actually what's going on. It gives me confidence. Yes, I'm actually my analysis, what I thought was correct. One thing is correct. I got enough information. Like I reasoned out properly. This is giving me evidence that what I think that other traders are going to do, what the market is doing, this is actually correct. Okay. Now, if something changes, I'll have to reassess. But right now, the evidence I'm seeing is everything right now is correct, for the most part. If I look at the dollar Swiss, I have a very similar thing. Look, I have basically on a short-term time, the 4-hour chart. I'm just saying this very quickly because I cannot talk very slowly after the market's open. Because there's trading opportunities a lot more often now, and if I'm just super slow, I'm not gonna get to everything I want to get to. I haven't even touched oil, I haven't gone over crosses like EuroCAD, blah 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 blah, and so I can't really just go super slowly. But again, I don't, I'll kind of adjust it. If everyone in the webinar room is saying this is too fast, I'll have to adjust it. But the problem is, but I don't think that will happen. Just because if it has to suit the time frame. If it's a time frame where there's a great deal of trade opportunities occurring and stuff like that, by going too slowly, what will happen is it will basically take away from what's necessary. Is people need to actually get kind of compare their trade plans to mine, or actually just learn. They need to be able to see. Look at what I'm doing to be able to assess do I know what I'm doing, and then also it is better to just kind of keep pace with what with so-called the circumstances of the market than not. Okay, so anyway, if I look at this franc on a 4-hour chart, I have this channel. Obviously there's a breakdown here. Why is it a breakdown that I can confirm and not just nothing? Well, this trend line is obviously very clear, but I have a breakdown here. Okay, this wick down, you see stops are being run, some follow through, and now I have what? This green candle to retest that channel, which is normal. What happens after that retest? Huge follow through sell off, which is confirming, yeah, this is a breakdown. Okay, now a channel breakdown usually doesn't have to go more than the width of the actual channel itself from where the channel started technically. So this width from this high to this low, it doesn't have to go more than that. It certainly hasn't gone that far. Wait, actually, hold on. Yeah, it certainly hasn't gone that far, so there's a great deal more to go. So the situation in dollar Swiss is confirming what? The situation in dollar Swiss is confirming there's more downside in the dollar, in the US dollar, right? Swiss franc is basically like a dollar. Meaning there's more downside in the dollar index and more upside in the euro. Does this make sense? So it's like I'm building a case of evidence, okay? Like if I want to convict someone or defend someone and find out what really happened, or being a lawyer, that's not actually a good example, because lawyers, what they do is they build evidence, but they don't even care about what's true. You can't build evidence and not be accurate evidence, and basically you can't BS your way to a winning trade like you can in in a court of law, unfortunately. Like, courts of law are basically like who can BS the best, all right? But in trading, but it's more like being like an investigator, like a truth investigator, where you actually have to find out what really happened. And to do that, I cannot just rely on like one piece of evidence. I really have to find enough evidence to actually really have a high degree of certainty. Okay, this is more likely to happen now. Okay, and that's what I'm doing. If that makes sense. Do you guys see why I'm going all through all these pairs, and why the correlation that's occurring across the board is confirming all of this stuff? Okay. Now, on a longer term basis, if I just look to a daily chart, I have on the Swiss franc, I have a daily chart. Obviously, a trap breakout, and then this was the Trump thing in November, the Trump election. We had that massive spike down and then a massive move up, and it sold off at resistance. Just recapping on a daily level. Now you had a major sell-off, okay? And this flag again, it's sort of like a flag. This is the channel I was showing earlier in the dollar Swiss, okay? And this is obviously a clear breakdown you see, okay? And that's projecting what? This lower low is projecting what? Lower high sell-off in this area. It's gonna get sold off somewhere in this fib, right? Somewhere in this fib. I said, what is it? 382 to 618. Look at right at the 618. You got, this is where it topped out. Just as what? The dollar index got to its resistance and gold got to its support at around 1200, right? All of these things hitting support and resistance at the same time. Okay? You want to make sure things are going to line up, because that means money's going to pour in unilaterally in one direction. Which way? US dollar short, selling. That's going to cause prices to move one way, unopposed. That's what's going to create these bigger moves that go one way, and that's where the money's made. Does that make sense? All right? So again, trading is not this mysterious, like, like people who say like you can't make, like, you can't, like, the market is like random. It's so absurd. It's so absurd. The reason people think this is, first of all, people don't like look at technical analysis. They don't understand it. And second, most people are really bad at technical analysis. Just like, you could say like, like most people are not like, are not like, extremely good at like cooking, or like not everyone gets like straight A's in school. Okay? Now, it's not as simple as like getting straight, or you could say like, it's like saying not everyone is good at math. Like, I have no idea really like what like what linear algebra is. It's like very high level college algebra. But it doesn't mean that like no one can do it. This is actually like a lot easier. It's just that you actually have to like, there's a huge learning curve. But once you actually realize it, you begin to see like the patterns, and then you begin to see like, a lot of people say, it's difficult because what they also do is they make a lot of mistakes. They only look at like the dollar Swiss, or they only look at like euro dollar, stuff like that. And you only look at a couple different things. You're not going to have enough information to know, because a lot of times, let's say, I've been going over this analysis. You've been seeing that the dollar has been lining up across the board, right? With gold, even with gold, okay? But a lot of times what you have is the dollar index is not agreeing with gold, okay, or dollar Swiss. So like what will happen is the dollar index is like in the middle. It's not at support or resistance. It's not where people would like close their longs and get short, or it's not at a turning point. But the dollar Swiss is, and gold is not. And they'll take a dollar Swiss short at resistance, but the other dollar pairs aren't there. Then resistance breaks because the other pairs aren't there yet. And people who are like shorting dollar Swiss, they're like, oh, this is you cannot predict this with enough regularity. Well, no, you can. It's just that you don't have enough information to actually tell you. You are looking at a dollar Swiss at resistance. You think that's all there is. You're missing a lot of information that's telling you don't buy it yet. Because some people are going to sell like you, but a lot of people are not. So you're not going to get a lot of one-way selling yet. You're unlikely to. You can, but there's not enough information where I can, I could decipher to really forecast that at a high rate of, high percentage rate, if that makes sense. And as I said before, a high percentage rate is very important. Does this make sense? All right. So I have all these things across the board. All right. Now, one thing that makes this difficult is, the dollar index reached resistance. But look at Swiss. The Swiss franc this is a general resistance area, but it's not like but the resistance area is a lot wider, you could say, than, resistance in the dollar Swiss goes all the way up to this trend line. That's like 50 pips higher. That's significantly, that's pretty significant. Okay? So, so you basically, like, the Swiss franc isn't going to be all that helpful, except for the fact that the chances of this getting all the way up here are a little less because this is already retested, like, pretty much properly this trend line. This is good enough because this retested right where this broke down from. This high. This is, do you see it's a level where it broke down from? That's basically good enough where I'm not thinking this needs to get closer to there. Okay? So the dollar Swiss is telling me direction. Okay? But in terms of finding a selling point, it's not that great. So I can't find necessarily a good place to sell a dollar Swiss at. So how am I going to sell this? How would I sell this? Because if I sell this to be technically valid, where does my stop have to be? It has to be above this trend line. Right? That's ridiculous. That's a 50 pip stop. Price can easily go up there and still drop down. What will happen? I'll be 50 pips down in a trade. That will affect me a lot. Okay? These kinds of trades are trades where, I guess, because you don't personally trade, but basically these are the types of trades that are that just kill you as a trader. Because maybe if I took this short here and this heads up 40 pips, I'll like lose confidence in the situation just because I'm down so much. I'll get out only to see a drop. Like, these types of things are the mistakes that are probably more responsible for, like, people who are not winning traders than, people who are not like winning traders, who could be, because they do things like that. All right. But if I cannot use the dollar Swiss as a good entry tool unless it gets there, what can I use? Well, dollar index I can use to a better degree. Something else I can use gold. If gold breaks this high, as I said before, and then pulls back to the fib area, the 618 to 382 zone, let's say if gold does this, so let's say this is what's been going on in gold, and now you have this zoom up that's supposed to be a very steep up line, but you basically got a worm. But you have this. If this breaks this, what will happen is if it pulls back, or when it pulls back, you're going to have a ton of buyers here, and people who were interested in selling, they are not going to get sold, because you're going to have all those sellers stopped out with their stops right here. Okay? Why do they have their stops there? Because markets move higher, lower, low, lower, high, lower, low, lower, high. When that trend breaks, they get out. So if I cannot find a good, entry tool with the Swiss franc, what can I use? I can use gold as one example. I can use gold as one example. Does this make sense? Now, does that mean only gold? No. But I would use gold in combination. I would look at where is the Swiss franc. I would look at where is the euro. But that kind of entry is very good in gold. All right? Does that... Okay? I can also use indicators. I can use pivot points, blah, 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 blah. Alright, so let me... Can you guys see my desktop again now? You guys saw the whiteboard. Can you see the desktop again? Because I've been having some like software issues sometimes with this, where the desktop doesn't show up. Okay, so you saw the whiteboard and now you see the screen, right? Right. Okay. So now what am I gonna do? Okay, so if I actually this if you look here, this is actually just like basically dollar pairs. This is this is yen pairs. Okay, this is yen pairs. All right. With a ton of indicators. Okay. But anyway, one thing to keep in mind. So one thing I'm keep in mind is so we saw like dollar and dollar Swiss blah, blah, all that stuff. If I look at this euro, look at this euro. This was I had this box as a lot of resistance before. Obviously this worked because you see, look at this wick on this chart. Right, I had this outline for a while. Right when it hit this resistance, what'd you have? Massive selling. So if you weren't ready for it and you had to like wait for it, and it got there and you didn't think like I'm definitely gonna sell when it gets there, you would have missed this massive like incredible short. Okay. You have a very fairly clear looking head and shoulders on dollar index. Is this a head and shoulders on the euro? Is it? Like this looks like this is like shoulder, head, and this is like a terrible looking shoulder. These kinds of and this didn't even break this high. You had basically one of the shoulders breaking to a new low in the dollar index, but you don't have that in the euro, which gives the which gives like less confidence in that this is really turning around to new highs, right? But you have some people taking this euro higher, right? And this broke to new highs. Because this broke to new highs, what's going to happen? You're going to have buyers come in, okay? Where will these buyers come in? Generally in this roll reversal area, this fib area. So basically anywhere in the low 106s, you're going to have a lot of buying. And so you're having, and price has already reached there. So you basically have euro in the beginning of where you're going to get a lot of buying. Dollar Swiss heading down overall. And you have dollar index now at places where you're going to get a lot of selling. So everything's lining up. Everything makes sense for one-way direction. Meaning this is a good trade-off situation, okay? But again, on a longer term basis, is this euro going to break higher? Well, if I only look at euro and dollar index and dollar Swiss, meaning is this euro going to like break this high? It's actually, it's not, you know, it's really hard to say. Really hard to say. Okay? That's tough. I couldn't tell you just based on those things alone because there's too much conflicting information. I think that the euro has a good chance of making breaking this high. This is a daily chart, but not like, I don't think euro breaking like the low 108s. I don't know about that. Okay, if it will have to be, let's take it and as we go. What is the main reason? Why do I not think that? Well, the dollar index charts, those pairs and gold, that didn't tell me enough to think that. Okay. That didn't tell me enough to think that. But if I look at like dollar yen, what do I have in dollar yen? I have in dollar yen, basically like you have a massive trend up from like the 70s to like the 120s in the yen, and you had this massive correction down to the 100 level. Okay. You had this breakout out of this triangle. And then to the 118s, and then dollar Swiss, dollar yen has been pulling back. Okay. I had this kind of outlined on like a chart, on like a planar chart where it's easier to see. Did I not? So basically what you have, look at this dollar yen. You basically have in this dollar yen, first of all, I'm very bullish long term. I think everyone and their mother is bullish long term. because you could say, well, you know, dollar yen has gone up a lot from the 70s. This is ridiculous. I mean, it's already in the 120s. It's like what? It's up like 60-70%. Isn't that like not sustainable for, you know, currency to rise that much in value? Well, if you look at a longer term chart, like dollar yen has historically been in like the high 100s. So this is still like very low on a historical basis. If you know, if you've been looking at this exchange rate for more than just like the last 6 or 7 years, or 5 or 6 years, 6 or 7 years. But you have basically, if you look, this, you have this like sort of flag down. You can see these trend lines. It's basically this like sort of channel down, and you have a breakout and follow through. What you're likely to have now on a very massive basis is another major move up of the dollar yen into the 120s. Meaning I am bullish like mad, and I think people in general are. That doesn't mean this is going to go up necessarily like immediately like shoot up. Okay? Because what you normally get is a proper pullback retest. You got that to some extent, but there's still room for that to happen. Not only that, I have yen pairs in general also having broken out. Like if I look at like, look at this, look at like look at this, it's hard to see there, but look at this. You have basically, since the correction, and this is Swiss franc, dollar yen, obviously you have a major breakout here as well, okay? Where this is broken out, but you haven't seen the major, you know, start to the continuation. Basically, like, the big move up, this is when dollar yen was in the low 100s, Swiss franc was here. This was the high in the yen, dollar yen. This is the correction from the 118s down to where it is now. And this is the breakout indicating this is more likely to start heading up higher. You have the same thing in the Canadian yen and Euro yen, and you know, all you basically have the same situation, a lot of yen pairs. And so there's just agreement in general across the yen boards that this yen is really heating up, is going to heat up. Okay? But the problem, what this creates is, right now I have Euro bullish, right? Well, not bullish yet, but now it's entering a bull zone. Okay, it's this very start of the bull zone. All right. So what you're gonna have is you're gonna have initial buying, decent buying, and will that hold or not? I don't know. Okay. My stop has to be like in a place where, like, if price drops below that, it's the bullish case is very likely. But like if price breaks 106 convincingly, like, I will have a very hard time going long. Okay. But basically, one of the problems with just taking a long here, okay, like 106.40, is that first of all, support is really closer to 106.20 and a little lower. Okay, so this is just outside of support. So I don't want to do that. Okay, the problem is this can easily drop down to 106. Right? So when is the safest place to go long when you have like a region of resistance? Well, there's not like a price point that's necessarily great. Maybe 106.20 and a little, or 106.30 at the low, at the highest. Okay, but if I see euro break this high and pull back, and gold does the same thing, then I'm more likely to get in. Okay, because then the trend has changed. All right. But I can, if I get in long here, and what do like, basically like people who don't know what they're doing do? They'll go long here, and they'll put a stop just below this. That's so stupid, because this is still support. Price can easily just kind of like, price can, let's say this is, okay, I was recording this before. I actually didn't show the whiteboard on this screen, but I'm recording it now, and the whiteboard is showing. So if I look at this, okay, if this is support, okay, for whatever reason my mouse on this drawing tool is moving really slow, like slower than normal. But basically, in this euro, I have this. Price is right here. If I long and I have a stop just here, why would I do that? Because price can easily double bottom just below and then head up. That can happen. Or it can drop lower and kind of do this thing, even go a bit lower than that to the very bottom of support before turning around. So I cannot have a stop here. So if I have my stop below support, what's my stop have to be? Well, right now my stop has to be like 45. You cannot hear? Since when can you not hear? Yeah, Simon, I think that there are problems with the audio on your computer. You have to check your settings because my click meeting is my click meeting through the internet is click meeting is registering. Yeah, Simon, I think there's something wrong with your audio because click meeting is recording audio. It's actually on the bar tool for me, it's registering that it can hear me, my voice, and they can hear. So the problem is something in your settings, alright? So if I long here, I need like a 45 pip stop. If I want to have like a profit to loss ratio of like 2 to 1 at least, I have to have like a 90 pip target from here. I think that's excessive. Okay. Do you want to end this webinar here or do you want to keep going? And the rest, do you guys want to finish too? Oh yeah, it'll be maybe a 2-hour webinar, but for this one, do you want to end this now? So Reem, you want to keep going for a little longer? Okay, so this is where you have price right now in the euro. Where my arrow is, okay, where that arrow is, that's where price is, okay. But actually no, not here. It's actually a little higher. It's here. Okay, so it's hard to long here. I cannot long here. A lot of people will go long here, and then they'll end up taking large losses. Okay, because it'll drop, and then they'll get out, and because I can't, they'll be like, because they don't realize that their risk to have a bounce up is like 45, 50 pips. They'll be down 30 pips, and they'll be like, okay, actually, you know what? I actually cannot handle this. They'll get out only to see price turn around. So even though I am bullish, I actually cannot long here. Okay, so it's a way to make sure that the quality is high of the trade. Okay, that doing this ensures that my wins are going to be bigger than my losses, and it ensures that my risks are going to be low, right? So, you know, if you want to make sure that you take trades where you don't take huge losses, you have to not put yourself in situations where you can take those losses. I am not willing to put in a 50 pip stop right now. So I'm not going to take a 50 pip loss. Does that make sense? Okay. But if I see euro break higher and I see gold break higher and I see correlated movements like that, then it makes sense to go long and I might have a stop below the low. Okay? But if that makes sense. Or maybe I'll take a long, but I'm not going to use the euro. I'll use gold instead because gold looks a lot stronger. Does that make sense? It looks relatively stronger. if that makes sense. Okay? But if I look at dollar yen, and one thing, pretty much the pound dollar in determining a lot of this isn't that helpful, because pound dollar has correlated to some degree, but it's pound dollar is kind of, there's a lot more variation in terms of what it does, because basically until price gets to like 120, like the pound dollar is a lot less correlated with dollar pairs generally, and then these days particularly, and so a little less generally, but more so, you know, in the last few months. And so basically, like, you know, pound dollar I'm not too interested in, maybe along in the 120 area, stuff like this. But one of the reasons I'm not interested in trading the pound dollar is because the pound I have less information. With these dollar pairs, I can look at dollar yen, euro dollar, dollar index, dollar Swiss, gold, Aussie dollar, dollar CAD even, also, right? So I have a lot more confirmation evidence to know price going one way over another. With pound dollar, you might have a lot of the dollar side of pound dollar like going down, but the pound kind of is a bit more of its own animal, and so I have less certainty about it. I have less evidence to know specifically what's going on. I want to know beforehand. I don't want to take the trade like hope it works. I want to have high degree of confidence this is going to happen, or these huge amounts of buyers are here, blah 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 blah. With pound dollar, I don't have that. Okay, so that's why I'm not trading pound dollar as much these days. Okay, if I don't know, I'm not gonna just trade it just because. Okay, and that's what a lot of people do, right? You have to win your battles before you fight them. Basically, you have to know that there's a high chance you're gonna win that. Okay, so you also just have enough confidence to hold the trade. All right. Without that, I'm not interested in taking it. And there's just too many other things to trade anyway. Anyway, with dollar yen. Dollar yen is extremely bullish, medium and long term. Extremely, extremely bullish. Which means what? If dollar yen goes up, what's been happening lately? Euro goes down. That means euro is not going to complete this inverse head and shoulders, meaning the dollar index is going to go up. What's been throwing some weirdness into this, okay? What's making this a bit more difficult though is that on Friday, for like the first time in a while, you had dollar yen and euro dollar both go up. They went in the same direction. That doesn't look like it's gonna happen today. That didn't really happen yesterday. But you're seeing some kind of like the breakup, the correlation. The correlation was dollar yen up, euro down. Like it was like dollar yen up, or it was like dollar yen down. If euro dollar didn't go up, at the very worst, it was just flat. Okay, but you're actually seeing a bit of a break of that correlation. And is this really a serious breakup? I don't know, because I have to maybe wait several more days to assess that. Because you're seeing signs of that happening, but it hasn't happened yet. So people are still trading the correlation, but there's going to be a little less confidence in it. Okay? But for now, I'm way more confident in the dollar yen. I'm probably more confident about dollar yen going up than anything else. All right? So everything else has to adjust to that. So either the euro dollar has to back down through 105, head towards parity, or you're going to see the breakup of the correlation between the dollar yen and the euro dollar, and I will have to assess that over the next few days, and maybe the next week or two. All right. But so long as euro dollar heads down, dollar yen is going to head up. So long as the correlation holds, and if euro dollar gets bought, dollar yen is going to head down. Okay. And you're seeing that a bit of that correlation right now. But I have to. Oh, I forgot to revert to the desktop again. Okay. Yeah, I actually did move from the whiteboard, but I forgot to click it. So, yeah, just if No, look, this has nothing to do with fundamentals, okay? One thing that people need to understand, if you don't trade, if you do not trade, you will never understand this, because you can only understand this from seeing it with your own eyes. But I can explain it to you in a way that like sort of makes sense. If you look at the chart I'm looking at, what do I have? I have a couple of moving averages and I have like a stochastic, but basically just candlesticks. What are candlesticks? Candlesticks are price, right? Meaning, no matter who is buying or selling, it's shown in this chart. Meaning, Reem, if you buy dollar yen for fundamental reasons, what you do will show up on my chart. People who are trading for like reasons of just, certain technical indicators, that shows up on the same chart. You are buying the same dollar yen, Reem, that they are if you're fundamentally investing that they are. Okay? What am I analyzing when I'm looking at a chart? Am I looking at some like weird school of technical analysis? No. What is technical analysis? Technical analysis is not like a weird like school of thought. Alright? Technical analysis is studying price behavior. That means regardless of the reason, it's the sum total of all buying and selling. Fundamental, technical, crazy, it doesn't matter. It's everything. Alright? Does this make sense? And so what am I looking at in analyzing dollar yen? I'm looking at bullish breakout upside. It's going to be, you could say, a combination, like fundamentals will be included in that. I don't know. You cannot say it for specifically this reason. Okay? If you say it's primarily for this reason, you just don't know. Okay? Because is it really for a fundamental reason that for like I guess all of this week price has been going up, or like all of last week price was like did this? Is it like the economic situation across the world and in Japan like changed by like 2% up and then another 2% down like within a couple days? No. Okay? It's not that. All right? It's just, what I guess maybe a way to describe it is you could see like on a fundamental basis, like people like, reasons for sustained movies not lasting. Let's say prices at resistance, okay, on like very important resistance on a monthly chart, and then you have like a spate of news that breaks resistance. What will happen is that news broke that resistance, but like, you could say maybe there's obviously going to be follow through to the upside, okay? And so like people who are trading are gonna continue trading it up, and you could say that fundamentally sort of expressed, but it's not even just that. I mean, it's not necessarily just that. I mean, you see prices reflected overall. So let's say like you look at sugar prices. Sugar prices bottomed out like several months ago, okay, on a long-term basis. All right, if you look at sugar prices, but was there necessarily news that like sugar was like bottoming out? No. Like, was there like bullish news like the supply of sugar is super low? No. News was probably like more bearish at that time. Okay? But sugar prices were rising in the face of bearish news. Why? Because what is news? News is reported after the fact. Like if you look at like GDP numbers, what is GDP? GDP is after the quarter's over, right? So all the economic transactions and like consumer prices, how those changed, any growth that already happened. That's already going to have, you could say like been that would have already like affected prices, like transactions throughout the quarter. The GDP news is just the reporting of that. Does that make sense? So on an ongoing basis, I am trading what's really going on with prices. Does that make sense? Okay. So I'm also very bullish long-term gold. So what's been happening is down dollar yen, up gold. Now the problem is gold is really broken out to the upside in a massively bullish way. In a massively bullish way. And by the way, I haven't shown it. I don't have time to show it. I'm not gonna have time to show it. But like these Euro crosses, Euro odd, Euro cad, they're very they're at strong resistance right now. So if I want a long Euro, maybe in circumstances I will, but over the next like couple weeks, unless resistance in Euro cad, Euro Aussie, Euro Kiwi, like those pairs, unless resistance breaks, I'm more likely to just look for longs in Aussie and Kiwi than longs in Euro if I have to long one of those. Okay, I think today I'm a bit more interested in long Euro because Euro has such strong support. But after maybe any move up in Euro, I would always be looking at Aussie and Kiwi for clues on what to do. But certainly with the breakdown in crude oil, I don't know how long that will last. So I will have to assess that because I don't know how strong an effect any further drop in crude will have. But if I look at gold, gold is broken out on a weekly chart. Obviously, the downtrend, this was broken, and now what you have is a higher low here, and what this is portending is what you'd have is like follow through to break to new highs in gold. And now you have gold at a lot of support, okay? Gold, you have a lot of support here, okay? At right around 1200. And very likely what you're going to get is a move up, okay? That will be in line with Euro dollar going up. That will hold that correlation, and you have that showing up, okay? You have that showing up, meaning dollar yen down. The problem is long term dollar yen is broken out up. Long term gold is broken out up, okay? One of this correlation cannot hold if both of these have broken out. If it holds, then actually one of these breakouts in gold or the dollar yen is a false breakout, okay? So this gold here or dollar yen here, one of these is false. I'm very strongly bullish on both, but if I had to choose, I guess I would have to choose dollar yen as more bullish. But we'll see. I am going to be looking very vigilantly for signs of the dollar yen gold correlation breaking up sometime soon, meaning over the next month or 2 months or 3 months. But until that correlation breaks, I can't trade against it, okay? So that's the situation. I'm very bullish gold right now, at least for the next few days. But again, actually next 2 days, because tomorrow everything might change. Everything is very likely to change. If they raise interest rates, which is very likely, the more likely situation is going to have a break of support in gold, and that's going to change some of the picture of what's going to happen. And so I'll have to reassess everything. If that happens, maybe you're going to see gold down, continue to drop down, and dollar yen continue to head up, and that's really what's going to happen. And so this has been happening up to now, and for today and up till tomorrow, this is what I'm planning. But I am obviously a lot of this is going to be changing with the interest rate decision. But my conviction in the dollar yen having broken to the upside is so strong that I don't care what their interest rate decision is going to be. I still think that's going to break to the upside. Okay. I think that basically like gold and dollar, the dollar, those might be a bit more variable. It might shift a bit more, but dollar, even if dollar yen drops 100 pips, I think it will get bought up, and it will over the next like month or two really start to gain heat to the upside. All right. So okay, so I think that's it. I'll just wrap up the webinar there because I've covered all the major pairs. I didn't cover the commodity. I didn't cover the commodity currencies. I didn't cover the commodity currencies enough. I covered them a bit, and then I've covered a lot of dollar pairs. But if I'm doing daily webinars every day and people are coming back every day, I'm not gonna have to like kind of explain a lot of this stuff from scratch. A lot of the analysis will be like continuation from the day prior and the days prior, and so it took a lot longer to explain all of this stuff to you because I had to like explain like my overall view like in total on like these things that normally I wouldn't have to cover like in such detail every single day. So yeah, that's it. If you have any last questions, otherwise I'll just close the room.